U.S. Farm Report on the road at the National Farm Machinery Show is brought to you by New Holland, your partner for every season. Visit newholland.com to learn more, and by FBN. Maximize your farm's profit potential. Visit FBN.com.
Welcome back to U.S. Farm Report this weekend. Well, we talked a lot about soybeans and demand, and that really in the first marketing roundtable. But let's shift to corn now as we see this acreage battle heat up. Talking to some farmers here that are saying, listen, even with nitrogen issues, I think I'm going to switch to beans, but then I'm having issues with glyphosate, the latest news, glufosinate prices, things like that. So as we look at this acreage battle, it could be the most interesting acreage battle we've ever had. But what are you favoring right now as far as acreage numbers go, Matt?
You got to keep something in mind. We started with 180 last year. We've got over 2 million more acres of wheat this year that are going in the ground that we already know of. We know cotton acres are going up. And so you've got to ask yourself, how much above 180 could we see? Because some of these survey-based approaches have been talking 182, 183, and I think that's going to be a big struggle. So I'm going to start with 180 combined. And I guess my personal opinion is that if I didn't get my anhydrous ammonia on last fall or my nitrogen source, because of whatever reason it might be, you better be in a really good production area where you've got good APH and a good assurance that you're going to be able to raise the yield that you need, because you're going to be putting $1,000 an acre most likely into a corn crop, and you've got to have some assurances there. So I do think that the fringe areas you could lose some acreage. If I was going to pinball it right now, I'd say maybe we've got a few more acres than corn than beans, but I do think that is going to add up to 180. So maybe 90.5 and 89.5.
Well, Andrew, I mean, every year we're talking to farmers, okay, what are your acreage? And a lot of times it's, well, I'm going to stick to my rotation. There's a couple layers in this year that are kind of being the deciding factor. But as you look at acres right now, especially in areas like Kentucky, do you think we will see a big shift this year?
I think Kentucky is going to see a shift to soybeans, away from corn. That's my opinion. Now, overall, I agree with Matt. I'm kind of starting at 180 combined, and I'm thinking more like a 91.5, 88.5 is kind of my split there. But I see marginal acres in Kentucky. Why take the risk? We've got a real good soybean market here. Now I'm hearing guys in the black dirt area saying, hey, I-states are going to slam in the corn. And I get that, but I think every operation is different. At what price did you book your inputs? Are you booked yet? What kind of soil types do you have? What is your yield potential on corn? What is the potential downside if it's a little bit dry? Because you've got more risk on the table than you've ever had this year.
There is a lot of risk. And Alan, when you're talking to farmers right now, are you seeing them favor, you talk to a lot of farmers all over, are you seeing them favor one crop over another?
I would say as a whole, most farmers are doing a good job in looking at what they can do from a profitability standpoint. They're exploring both sides of the equation. And the one thing that I say that I really think they need to think about this year, make sure you're not running these cash flows by yourself. Make sure you're getting value out of your banking relationship. It's not the year to try to do it on your own. Make sure you use that network that's available to you.
Matt, corn demand's been pretty good this year. I mean, it's, somebody put it as it's firing on all cylinders. It has been that way. Are you concerned that there is some risk when it comes to the demand side of corn?
Yeah, and so whenever you look, for instance, at ethanol grind, we continue to see that we've bumped up on a wall here in the last several weeks, and a lot of it has to do with logistics. Not being able to get rid of the ethanol whenever your ethanol plant's full restricts how much you can grind every day. And so I definitely feel like there's a little bit of a restriction there. But whenever I look over at the export side of things, I've got to think that there's potential. We could see some growth there through the rest of this marketing year. Right now, the USDA is using a 1.54 on carry. I've got to think that we're going to be sub 1.5 easily, but I don't know that I would be drastically, I don't think I could get under 1.4 currently. I do think that there's a reason to be very optimistic whenever you're looking towards exports, though.
But speaking of movement of grains, I mean, you look at low river levels right now. Has that been a barrier? I mean, are there issues right now moving our exports down these main shipping veins?
One of the biggest talking points I've heard about barge movement specifically, we're on the Ohio River, you Kentucky guys, you're familiar with those markets, is the staffing issues. One guy on a boat, on a tow, gets COVID, the whole thing's disbanded, okay, and you got to start all over. So barge movement has been really bad. I would say in this area right here, we're 20 cents below normal basis on corn. And a lot of that has to do with barge freight, is at such a premium up front. And if you look forward, it's a little cheaper because we keep thinking it'll get better. But and it has come down a little bit. But overall, barge movement has definitely affected things. There's still demand at the Gulf. Those bids are still inverted.
Real quick on cattle, Matt. This year have seen some positive forecasts when it comes to cattle prices. We've seen some positive movement when it comes to the sale barn and seeing some of the cash trade when it comes to cattle. Looking at our dwindling supplies, do you think that continues to be a theme this year?
Well, I think so, and I think any time that you see our exports at times have run really strong whenever it comes to cattle. Demand's been really strong. We've tried to kill beef demand, or said that it was going to die over the last couple of years for a variety of factors, and it never really has. And so anytime folks have a fair amount of money in their pocket, they're going to go out and eat a steak like a couple of us did last night. So I think that you're going to see beef demand stay very strong, and with cattle numbers where they're at, I still think that we see $150 fats over the next couple, 3 months. And that's not that far-fetched looking at the board today.
All right, Matt, Alan, Andrew, thank you for joining us this weekend. We appreciate it. Let's take a quick break, and then we'll have much more on U.S. Farm Report.